What's up, everybody, and welcome to another trading analytics video. I'm Trade Runner, and we've had some super exciting movements in the marketplace overall the last few days. And also, we have a major update to our $10,000 account challenge that I mentioned in our last video. But before we get into that, if you guys haven't already, please like, comment, subscribe to the channel. It really helps us out and helps us get more quality videos out to you guys at a much more reasonable rate. So excited about that. Now, let's get to the video. Well, like I mentioned, the market overall has been in a massive movement swings. We've seen a lot of rebalancing, a lot of reallocation of a lot of funds, and where the overall sectors are what overall sectors are being shifted out of, right? So we've seen a lot of movement out of tech into defensive names like healthcare, banking, real estate, whatever. Big box retailers, things that are big in the Dow, and tech as a whole has seen a massive drop off. We can see here, looking at Meta's chart currently, we're actually in a pretty interesting spot where the ticker actually rejected from a very strong trend line that was drawn on the 4-hour. You can also look at it in the daily as well. It's pretty solid. It's held up for pretty much the entirety of 2024. Dating back to 2023 and beyond. If you actually look at the extended trend line out, it goes back all the way to like the beginning of 2023 when Meta was at its beginning its massive run up for the end of the year. But here you saw we had a nice little rejection point from 541, which established a new all-time high on the ticker. And then from that rejection point, we kind of dropped down here to this area where we got down at 480. Actually, if you guys remember some of our previous videos, I had 480 charted out as a rejection point from the top of this trend line since about middle of June, just based off of just some historical movement and how solidly that trend line has been respected the last few months. And right now, Meta, you saw, along with the other major tech names, and the QQQ index kind of fell off a cliff, or so to speak, today. And with Meta, we actually see we're in a pretty interesting zone here. So if we lose 453, which is a pretty solid support line as well. This dates back all the way to about February of this year, where 453 has been a nice little bounce zone historically. But if we lose that area, then it's pretty likely that we're going to retest this 432 trend line on the downside to kind of establish a new low for a potential bounce from that area there. So if you're looking to go long on Meta, I would not be opposed to taking some entries around the 453 mark. But ideally, you do want to see how the 453 support holds. If we get some green candles above this zone here, then it's likely that this is going to hold a support and we can go back to retest 480 within a relatively short period of time. Or if we lose that 453 zone on Meta, I would want to see if we get some closing candles to the downside for a look to retest that 432 zone. So there's some pretty decent opportunities to make some money on either side of Meta. But I also think overall that it's a similar story in the entirety of the Qs as well. I'm more in the camp that we're going to get that bounce sooner rather than the retest of 432, because that will kind of coincide with what I believe is the next rotation of capital back into the tech market. Right, we needed this cooling off period because tech has been running rampant with the AI boom over the last 8 months or so, spearheaded by companies like NVIDIA, AMD, Google, Apple, and the like. And we see things like NVIDIA, TSM, and AMD got hammered today. But again, if you look at the overall tech sector, so we'll jump over here to Google. You'll see we're at a pretty low risk entry point as well for a push to the upside, heading into big tech ER starting next week. So that's something to keep an eye on here. Google, that also is the same for GOGL as well, just at different price points on the ticker. So a lot of tech, and jumping over to the Qs, we'll actually jump over here to the daily. So a lot of tech is looking to retest pretty key areas of support. Qs, you saw we had a $15 drop off from the opening candles today, or from the close of yesterday to the open of today, to the close of today, I should say. So it's been a lot of scared money leaving the tech sector. But again, we're just pushing ourselves into levels that we haven't seen, right? So jumping back over to Google. You can see here, going back to the hour, I'm actually going to go over to the hourly chart. You see here that this trend line is pretty solid at 182, between 182 and 181. And as long as this line continues to hold, I will be bullish on Google's movements. I mean, the head and shoulders already played out here, left shoulder, head, right shoulder, played out to the downside like I expected to retest that trend line. And then I do think heading into ER, we're going to see a bounce from this zone to retest the 187 resistance point before. So we got about a week or so to make that move on Google. So I'm pretty excited for that. Other than that, I think the general tech sector is going to follow, and it's going to be pretty exciting to see as long as that holds. I mean, we saw what happened with banking. I know this is going to be a little bit longer video than normal, but guys know I've been eyeing banks for a number of weeks heading into their ERs. I knew when to short. Citigroup was our number one short, as you can see here on the screen. I called those Citi puts right from the gates, and we got, what, 1,000% on those. Beautiful job on the banks following that rotation. But I also called actually earlier this week on Monday, on one of our morning calls before the market opened, that once JPM kind of settled after the sell-off they had Friday morning, or Friday afternoon, that we caught our footing at 202, and that we were going to bounce all the way back up to 210 is what my target was based off this trend line here. And this is strictly based off of the weekly trend line that we're likely going to retest from following that sell-off that we saw on Friday. And then what happened? 210. And then the next price target I gave to the members in our server, I said 214. 214 on JPM was next. And we ran through that. So we took these 210 calls. We actually did a little over 200% on those this week. And it could have been a lot more had I grabbed them a little bit earlier. But very confident in that play, and it played out very well for members of our server as well as myself. And that's pretty much it. So like I said, the rotation out of tech into defensive names last week, I think is going to kind of see a little bit of a stop to it as we head into big tech ERs. So we're going to see some more money going into the tech sector as we're hitting daily oversold on a lot of these names we haven't done in a very long time. Again, using Google as an example, last time we were daily oversold on Google, we were at 130. And we ran from 130 all the way up to 190 within a 4.5 month span. So just keep that in mind. I don't expect a significant move like that right out the gate, just based off of the sheer volume of what we've seen this year. But all in all, I think that we're going to see a little bit more of a rotation back into the tech names to kind of take advantage of this cooling off period and make sure a lot of these MMs and institutional investors don't, oversell some of these major positions that they're in. Now, that being said, I want to actually highlight something I mentioned at the top of this video, which was an update to our 10K account challenge that I've been mentioning the last few videos as well. You guys know we started a $1,000 to $10,000 account challenge in our server back in May. And as of this past Friday, we have officially done it. That $1,000 to $10,000 for the members in our server who are participating in the challenge has officially been completed as of last week. And it's a beautiful thing. Here's some of the testimonials that we've talked about in the server from our members, as well as just some of the gains that they've gotten in trades that weren't part of the challenge, right? But overall, the challenge has been such a huge success that we've actually started a second $1,000 to $10,000 account challenge for those who have missed our initial one that started 2 months ago. So we're doing that. And then for those who have been participating or those who have a little bit larger port size who want to participate further, we've actually just announced that we're going to be taking the $10,000 account challenge up. We're going to target 15,000 shortly. And then from there, we're looking to go 25,000 and potentially even higher than that. So it's been a blast participating in this challenge and having this challenge in our server. Our members have loved it. They're seeing the growth for some of their accounts from 1,000. Some people are at 18,000. Some people are at 15,000. Some people are at 12, 10, whatever the case may be. But the goal we set out with for that challenge was to 10x your accounts in a short period of time, and we did it. And we can't say enough about that. So that was a huge success. Shout out to the rest of the trading analytics team for helping navigate through that challenge. And congratulations to all the members who have succeeded and have officially 10x their ports in a 2-month time frame. Can't wait to see what's next on the horizon for everybody. let's take this secondary 1,000 to 10,000 account challenge to the moon for those members who didn't get a chance to start up with us when we first started. And then we have the 10,000 to whatever challenge, whether we do 25,000, whether we do 50,000, whether we end up taking all the way to 100,000 for those who've already completed the first part of the challenge. That will likely be the case as well. So very, very excited about that. Those of you guys who are trying to find some information about our Discord, link to that will be in the description of this video as well as in our channel bio. Again, testimonials don't lie, members don't lie, the numbers don't lie at the end of the day. The 1,010K challenge was a rousing success. The overall market has seen a rotation from tech to defensive stocks, and now we're likely going to see a rotation back into tech. And we just trade the charts, guys. Trade the charts. In any case, this has been a little bit longer video than normal. I've been Trade Runner. This is Trading Analytics. Thank you guys so much for watching. Until next time.